Let me first ask you about this Reuters report that says you're going to look to cut production to raise margins. Can you tell us where we're going to see cuts? Is it inside of Germany or outside?
Good morning from my side. It's a pleasure really to be with you on our historic day when present Siemens Energy on our first Capital Market Day, really to all investors and to the market. We have been discussing quite some time. We already announced in 2019 that we drive efficiency programs to get a better cost base, and we're doing this actually at the moment. We're halfway through an improvement program and a restructuring program. We have in the past, by the way, already closed around 25 sites. We're going to continue to look into these type of measures. There's nothing yet additional in firm and fix, but this is what we continue really to look into once we obviously drive also through the transformation of our portfolio. But this is obviously something which is, I would call, an evolutionary process, not a revolutionary process, and working really on a cost base to drive profitability.
So where do you see cuts being focused right now, Christian? I mean, are we looking at cuts inside Germany or outside of the country? It's also been reported that you won't agree or you won't accept the Radaufzell agreement, which allows unions to have a say on plant closures.
Look, I think if we talk about cost, we not always talk about immediately people cuts. We also talk about things like driving logistics costs down, improvement of procurement costs. And there's multiple elements. What we see at the moment, we have a relatively complex logistics for certain products where we tie in several fabrication sites into the fabrication of one product. This is we want to get rid of. And the other things around, okay, what does it mean in addition? What other changes happening in the market is something what we're looking at the moment. We're working this out. There is no really detailed plan yet at this point in time, and we're going to take our time working through this step by step. With regards to obviously the discussion on the agreement, also what you referred to, this is an agreement which belongs to Siemens AG, which will not obviously be immediately taken over at Siemens Energy, but at the same time, we are highly interested to everything what we're doing in agreement and in coordination with our works representatives. We, at the end, have the same target. We want to drive up profitability of this company, we want to serve our customers, and we want to be successful. And one thing is also clear, Siemens Energy as a technology company is a people business, right? We are depending on people who have the knowledge, really, and this is what we're obviously trying to balance out, seeing at the same time that we do have a transforming energy market, which will continuously require us to work on ourselves, transforming ourselves, and I think our people understand this very well, and we are continuously working on this.
Christian, good morning. It's Anna in London. So you've got your Capital Markets Day taking place today. No doubt you've honed in on that sales pitch. What is the biggest, most important reason, do you think, for investors to consider investing in your business when you IPO?
Yeah, there's a couple of, and obviously we are really a focused energy pure play company. And if you look across the market, you will hardly find any company who cuts across from the portfolio from conventional technologies like gas and steam turbines over to renewables like wind turbines, covers generation of electricity, transmission of electricity or storage of electricity down to green hydrogen. And this is really what Siemens Energy is about. It comprises 150 years really experience in energy technologies. It's an enormous amount of capabilities in there. And the spin-off obviously allows us to address also measures on operational performance. With this setup what we're having, we are a mirror of today's energy technology and energy world. And with this, obviously, we are keen really to accompany our customers in this transition through a more sustainable world. And we believe we have a lot to offer there. And we see it in our current discussion. I see it being now 4 months with the company and the discussions with the customers. They really want to understand with somebody who understands the whole energy technology on how to get to the more sustainable energy world. And this is why we believe we have a very good market position really to drive this forward. And this will be also our story, what we also explain today to the investors.
And Christian, you say you're a mirror of today's energy markets. Are you a mirror, though, of tomorrow's? Because some investors might be concerned that they might prefer to go for a green, new energy, pure play somewhere else rather than a business that mixes the new and the old as you do.
You know, I'm a strong believer that it requires interim solution really to shape the energy world. And obviously, I also strongly believe we will need, for example, gas turbines for some amount of time. I think we all agree on the final target. We want to build a sustainable energy world. But if you see that today's electricity production is based 40% on coal, roughly 20% on natural gas, 10% on nuclear, and less than 10% on solar and wind, there's some path we have to go. And for me, it is important that we provide solutions which you can start today. And I believe there's a lot of value what you can generate by really being able to providing this interim solutions, the more efficient gas turbine technologies, the combined plants, battery storage with generation technologies. These are the interim steps I'm talking about, which will improve the sustainability of the electricity generation, but it's an interim step. And I think there's a lot of value to generate, and this is why I believe it's a good offering really to have such a broad portfolio, and I'm convinced that we can also not only convince our customer, but also obviously the market on this setup.
Christian, can I just ask you about the COVID-19 pandemic? I mean, we saw a real hit to energy demand in April. Of course, a recovery since then. But what's your view on demand from here on out? Because we could see, obviously, we could be in the midst of a second wave. We could see a third wave. I mean, this could be something that sticks with us for a while.
Yeah, I mean, nobody exactly knows on how the situation on COVID is going to develop going forward. First of all, I have to say I'm extremely proud and pleased to see what the Siemens Energy organization has done over the past month on how to manage Corona crisis, really keeping the customer sites running, keeping the lights on. We had no bigger cancellations of big projects actually during Corona times, which made us relatively resilient. You will see an impact on our numbers, and we present this today on the Capital Market Day. So it's headwind for us, no question. We at the moment assume that it's really in terms of the impact on the market bottoms out in Q3 and Q4 and then slowly recovers. That is our assumption at the moment. Obviously not really exactly knowing on how all going to develop going forward. But in the midterm, we believe that it does not impact the expectation on the growth in the electricity market.